All right, welcome to today's class. We're here with the team chat right now. Everybody's tapped in, everyone's tuned in. So the main topic today that we're going to get into, we want to help you guys today to perfect your trading entries and exits. Like what exactly does it take to have a fantastic trade entry? How can you actually be more consistently profitable? And like realistically, like where exactly should you start in your trading career to just become profitable? And for me today, I realized that between everything that you learn, exits and entries will be your most profitable thing to focus on so you can become a better trader. So I'm going to go and share my screen and we'll get into today's presentation. Let's get right into it. Here we go. Let's get into it, man. So today we're going to focus on introducing profitable trading. Obviously, there's a little typo right here, but we'll go ahead and ignore that. All right. So we're going to be getting into introducing to profitable trading. All right. So let me go ahead and make sure. Let me make sure my video. Man, they're playing. All right, here we go. It's my videos right here. Let's get into it. All right. So first and foremost, for your profitable trading, there's a couple of elements that you do want to focus on. And real quick, this thing is kind of messed up. Okay. So your first thing that you want to focus on is understanding your entry positions, finding key levels. You like using technical analysis, then honestly understanding this overall market sentiment. So the main thing that we're going to cover today, this has been like a way that we've been making the most of our bag on our chat right now, is our next strategy right here. We're getting into finding our optimal, most profitable entry signals. So one thing that we don't use in our chat, and I feel like is definitely you shouldn't use as far as trading, is using breakout patterns. Like finding like a breakout pattern is simply like this. Let's go ahead and say that you're looking at a trade and then, you're seeing that calls are now breaking out. So you go buy calls right here. Oh, look at this risk to reward. It's pretty bad. So what we do right now, many things that we do in our trading, group, we're finding trend reversals and like the ideology of that trading reversals, finding proper candlestick pattern formations. So for me, what would be killing it is finding and understanding how to use fair value gaps to locate key entry points to allow you to get profitable trades. So in today's class, real quick, we're going to actually recap today's trade that we took. Today's trade, we actually made a lot of money using a fair value gap today on Google. It was a fantastic trade. It ran way further than I expected, but it ran heavily. So I'm going to show you how to basically identify a gap, how to actually understand how the gap fill psychology works, and how to also incorporate your gaps into your trading strategy. So first and foremost, let me go ahead and open up my chart here. And let's go ahead and look at the stock chart today of Google. So these calls today on Google was the main play of the day. And as you can see, I got off a mentee call. We were putting this work to like really just break down like how the trade went, how it works and everything, right? So let's go ahead and locate and show you guys how this trade basically played out in our favor for ANC. All right. So first and foremost, if you want to create a fair value gap, it's going to be pretty simple. We want to use it. It's basically going to be a 3-candle sequence. And if you're new to this, I'll probably have some notes to kind of like write things down so you can kind of make sure you keep this for yourself. But whenever you're drawing gaps in the market, right, it's going to be a 3-candle sequence. And how you draw it, you basically want to go ahead and locate the 3 candles of choice. And my 3, and the reason why we use these 3 is going to be this one right here. So right here's candle 1, candle 2, and candle 3. Well, actually, hold on. Right here's candle 1, candle 2, and candle 3, right? So how you draw this gap, you want to go ahead and first of all mark your candles. So this right here is candle 1, candle 2, candle 3, right? To locate and draw a fair value gap, this is going to be called an inefficiency in the market. It's going to leave behind a gap where typically the market has to pull back to continue in any direction. So you want to basically use the very, very top wick of the first candle right here, and then go ahead and drag it now to the bottom wick here of the third candlestick, which is right here. See that? Which is right here. So what happens is the market is actually leaving behind a gap. And this gap is called an imbalance. It's called an inefficiency. And basically, I'm going to show you a couple of steps how you're actually able to use this gap to your advantage and make some money. And even how we use it today to make a bag today on Google, all right? So now that I've shown you how to draw a fair value gap, but do like another like example later. But this right here is the gap today on Google, right? So let me show you the trade that we took today in our trading chat. So the trade today on Google, we were basically looked to get to some calls today on Google. And the calls that I took was right here. So I called out to look, I was watching some calls today on Google, right? But how exactly do I use this gap to my advantage? Like, how do I actually use this gap to make money while I'm trading? Well, first and foremost, I use a strategy. It's called a fair value gap sweep. So what I'm able to see is typically I'll use this gap, right? I want to go ahead and spot and understand where the buyers or sellers, like where are they in the market? Like who is winning this current battle, right? So after you have this gap right here, I was able to see this candlestick right here. I'm gonna highlight it. We tried to close below this gap, right? Like we literally tried to close below this gap, but we couldn't. So we left behind this big old wick. This wick right here is called liquidity. So this movement right here is called a big time liquidity grab. And on top of that, this right here is my pre-market high level here on Google. So we created a liquidity grab right now from this gap, from this area here, down to pre-market highs right here. And we left behind a big, gigantic wick here on Google. So now you as the investor, if you see something like this, you want to always, always, always be looking at stocks on different time frames. So you can basically understand like if what you're seeing is actually true. So this right here is the chart here on Google on the 5-minute chart. On the right side, I'm going to show you guys the 1-minute chart here of Google. So you can go ahead and see like what it actually looked like on today's trade. And this right here is why it's so important to use different time frames, because on the 1-minute time frame, you're able to see candles close consistently below this area, right? It came below pre-market highs and everything, right? But what you don't see is on the 5-minute chart, the candle actually ended up closing exactly above this gapping area. So what that means for you as the investor is buyers are right here. Buyers are going to be stepping in here in a short time frame. However, this is not going to be enough confirmation for you to go ahead and buy a call trade on the position, because this call today, we're focusing on getting the best entries and the best exits on every single trade. So now that we see that this candle closed here with like a nice wick here below this fair value gap, the next candle that came through right here, it's a very, very strong likelihood that seeing that buyers have stepped in on this next pullback, there's going to be a great buying opportunity because we're seeing that buyers not prevalent and not present here on this trade in a short time frame. So this right here on the stock chart, this right here is 905 right here, and right here is 903. So notice here today at exactly 903, I told the chat that I have Google calls on watch, which means that I have not bought the calls yet, but I'm looking at buying some calls. So I'm seeing something, a pattern is coming in front of my face. Pause, no diddy. But like I was seeing that something was coming up. You know what I'm saying? I seen something was cooking. All right. So I said, hey, yo, calls gonna be on watch, right? This is 903. This basically was down here at the very, very bottom of this like area right here, the very bottom of this gap. And then here exactly at 905, I told the whole team chat to go ahead and buy into some calls today on Google because we made a pullback below the gap. And let me show you. So right here at 905, check it out. Because I'm only buying stocks for reversals. So right here on Google, we actually made a pullback right here, which is exactly at 905. This pullback right here was intentional on my part for my entry because I was looking to make the best optimal entry for this time frame on Google. And we're on a live call, so people are able to hear us making this entry right here. And then I even went further to say that I like this setup. Because this fair value gap sweep, guys, believe it or not, I do back testing on my trades, and I've done about 50 trades back testing, and this shit really works. So then I see that retest right here. We bought our calls right here. And now you may ask, if you're entering off a fair value sweep, where exactly will be your entry point? I mean, your exit point. That's a good question. It's going to depend on which type of trader you are, what the market sentiment is for the day, and then exactly what you're aiming for on today. Because you should, I'm gonna show you guys soon, but you should know your goals every single day while you're trading. So on this trade here specifically, I was looking for about 25% because I have certain goals already aligned. This is my goal for the day. However, whenever you buy a sweep like this, let me show you exactly how you want to keep your stop losses so you can always stay in the trade and hold it longer. Me, myself, one of my biggest issues in my trading career right now, even though I'm profitable, is I sometimes will sell my profits before it makes a full move. And I mean, I'm just be transparent. It sucks sometimes. I can make like a lot more money, but it does keep me sane because it works for me. But I'm graduating and I'm learning that if you hold it for your full move, you will actually see more of the fruits of your labor. All right. So if you want to see basically how you want to create your stop loss and entry for this trade. So if you were to enter this trade with us today, right here at this time frame here on Google, right? This right here is our entry. Now, Ryan, where is your stop loss going to be on this trade? Where's your stop loss? It's for me, it's going to be a 5-minute candle closure below this fair value gap right here. That will completely invalidate my trade on the setup. So I keep my stop loss, should write this down, guys, as a 5-minute candle closure below this fair value gap. And the reason why that's so important is, see right here, let me delete this. See how this candle right here, it basically created a wick below the gap, but it did not close below the gap. It created a wick right here, but it did not close. So a lot of rookie traders that have a physical stop loss and all this, rookie business, they're going to stop out right here because the candle had a wick below the gap. But the 5-minute candle, guys, it did not even close. So until a 5-minute candle closes under this gap, the trade will be invalidated. But because it didn't, let me show you what actually happened on this trade. So here's our entry. This right here is my stop loss is going to be, so this right here is my entry. My stop loss is going to be pretty damn tight. And where exactly was I looking for this trade to go to? Because if we head above this area, you're gonna have a pretty big area for your profit goal. So my profit goal was to get basically above high of day, but realistically, I was targeting like the highest body of the day, which is basically about right here on Google, right here. So not only did this trade hold and not close any candles below this gap, but you're also able to see here. Let me show you right quick. We were able to create a big time bullish pennant on the stock trade today, which is looking like this. A bullish pennant, you'll see a flagpole followed by like a little sideways triangle followed by a breakout. You can see right here as well. Flagpole, pennant, breakout. Flagpole, pennant, breakout, right? So on the 5-minute chart, if you zoom out, check it out. What's this being created? A flagpole, pennant, breakout. So we had over 5 levels of confirmation on this trade today. Number one, we had a gap right here being created, a big time sweep right here being created on the gap. We had a retest to pre-market highs followed by a bounce. We had a bullish pennant being created right here. And on top of this, SPY was also ripping at the same exact time. So that's basically how I was able to formulate my entry on today's trade today on Google. Posted to the whole entire team chat. We all banked. It was a great trade. Now the exit right here, I held a runner and we were able to print here on this trade. I ended up selling my first bag right here because it made a full, movement, but my runner was able to sell for a nice profit here today on Google. So that's basically how you're able to find and identify key trades in any market. And I'm gonna show you guys also another trade that I took today real quick on the video. So I created another gap here. So this strategy works like butter, like cheese, like ham. You know what I'm saying? I'm just naming some foods at this point. But basically, same thing that we did the first time. You're gonna draw the gap here from the top wick of the first candle to the bottom wick here of the third candle, right? This right here is my gap created on the video. If you want to see me draw it again, easy. Start right here, the top wick, right here to the bottom wick right here. Then right here, go ahead and drag it all the way across. And as you can see, I have it circled of where I took my trade because this thing made me some money on that video. I should have called it out, but I was kind of like in my zone. I'm just calling out some more plays. But same thing happened right here, guys. Same thing happened. We created right here is what we call a fair value gap sweep right here. And then on the very, very next candle that came in, the very, very next candle, it dropped right here. And we were able to make a very, very good entry on this trade right here, thus giving you a very, very good risk to reward. Because if your entry is right here on this next pullback and your stop loss is a 5-minute candle, typically closure below this previous wick or below this gap, you can go ahead and enter right there and your stop loss and then your TP is like your next two critical levels, which means right here. So this is basically how you're able to use the strategy to your advantage and find some trades in the market. Now, we're going to keep on going on with the slideshow so we can kind of make sure we can kind of stay good on time. But that right there was how we're able to, this is how I was able to catch two different trades today. I called out one of them and it printed using my gap fill dynamic. And then we also incorporated this strategy into my trading career today. So now next up, we just covered for you guys the exits, the stop loss placement, right? The take profit triggers, what's actually needed, like where exactly will your stop loss be, where will your take profit be? Now, let's go ahead and cover a little bit about position sizing, because this right here is going to be super duper important and super key to your trading career right now. Position sizing. This is probably like one of the most important things. You could have any trading strategy, but if you have poor sizing in your positions, poor risk management, well, you will have a poor banking account because you're going to blow your portfolio. Sad to say it, but you need to have proper risk management, or else you could mess up a lot in your trading career. What would that look like? Well, let's go ahead and imagine right here that we have a timeline, right? So here is our timeline. Okay. So let's go ahead and imagine that you have $1,000 that you want to put into a trade. So let's go ahead and imagine that you go ahead and buy your trades. Let's let you buy 5 contracts originally. This is ugly. Let's say that you go ahead and buy 5 contracts, right? For $100 each, right? It's about, oh my God, I can't type. You know what? I'm gonna just type this. It's gonna be $100 each. And then your other 5 contracts, you go ahead and buy it right here for $80 each, right? Let me go, I'm show you guys what's gonna happen. $80. So what happens is, you guys, check this out. You bought your first 5 right here for $100, right? Each, right? What that does is you're in for a total size right here of $500 for your total trade size, because 5 times 100, right? But mind you, you have a full $1,000 to play with in this trade. Okay. So because you put $500 into the trade right here, if the trade pulls back by 20%, what happens? Now the average price per contract is sitting at $80 per contract. So if you buy 5 more contracts at $80 a pop, now your total size is going to be $400 right here. I'm sorry, I can't type good with this thing. It kind of makes it look nasty numbers, but look, this right here is 400. All right, I'm trying. 400 right here is 500. So your total size in this trade right now is $500 plus $400. So what's $500 plus $400? That is $900. But now you have 5 and 5 contracts. So you're in for 10 contracts at a total size of $900 in your total position size, right? So what is $900 divided by 10? That's gonna mean $90 per contract. And the best part about that is the $90, it's gonna be right here at this midpoint in your trade. So now your average size, your average fill price for this trade is going to be reduced from $100 down to $90 simply by using what? Let me show you right quick. By using the bands technique, the average down strategy to protect your portfolio from market downturns and volatility is called the bands technique, where you're doing proper position sizing into your trades. So there's times in your trades whenever this strategy right here is going to make you so much money, and when the trades go in like the opposite direction, you're only losing half of your size. Because imagine that you bought into the trade with only $500, but now the trade's in shambles. Well, you're off the trade now, but you only put in $500 whenever you intended to put in 1,000. So you're able to make more profits and then have your losses mitigated. And let me explain why. Because if this trade now goes ahead and then runs to 110, right? So 110. What happens is, if you didn't average down, if you didn't use the bands method, you'll be up $10 profit per contract because your average size is $100. But because you average down at $80, now your average size per trade is now reduced down to $90 per contract. So now whenever your trade goes from $80 back to 110, you're now in profits of $20 per contract. So what is $20 divided by 110? You're now in 18% profits because you average down. Whereas somebody else, they'll be up 10% because they didn't average down. So this strategy right here is super helpful to help you have a much better size into your position size. And then if you use this strategy right here with fair value gaps, with your entries, and then you have a proper exit, you're going to change the trajectory of your trading career tremendously if you understand how to properly size. So today on Google, I'm going to show you guys how I was able to size and how I was able to tell my team chat how to properly size today on Google. So let me know if I'm talking too fast too. I'm trying to talk slow, but there's like a lot of information right here that I'm passionate about. I love this talk. You know, this is where the money is made in the research and the work. So I told my team chat today that I bought into these calls today lightly because I wanted to basically buy some more if he had a price dip. So if someone buys into calls lightly, that isn't buying your full size into your position. It's not expressing your full trade size just yet. So me buying a light bag right here is buying lightly right here. And then on this next dip right here, I bought the rest of my bag. And then funny enough, it had a breakout on this trade. So let me know if that makes sense for you guys here as far as this dynamic, this data wheel right here. That's basically how you're able to properly size into your trades. So long story short, if you were to have $2,000 into your trading account today, well, you want to use the game plan and the rule of 2020. So you want to risk 20% of your trade, of your size per trade, and then profit the same amount. So 20% of 1,000. Oh my! So basically, it's $200 per trade. So if you have 2,000 into your portfolio, you want to basically risk about $400 to $500 per trade. So if you are risking $500 per trade, right? You want to go ahead and get into your first, don't show your full hand on your first entry in your trade. Properly size in slowly. Take your time, guys. There's no rush to this bag. There's markets open every single day. Take your time with the bag. Throw about half the size into your first trade size, like throw a quarter. And then if the trade pulls back on you, now you're able to actually average into your position size. See if you're sports betting and you're betting on the Lakers and shit like that. If the Lakers lose, the Lakers lose. The money's gone. But in trading, you have the opportunity to actually mitigate your position and actually size into your bag. So use that to your advantage. Don't full port and don't show your full hand on like every single trade unless every single thing aligns. The stars, the moon, and everything. All right. Real talk. You'll make so much more money and you will save so much buying power at the end of the day. I promise you. Now, next up, diversification. Now, a lot of people today might just be focusing on SPX trading or AMD trading or Microsoft, whatever, right? Spend time to gradually check out other companies, other stocks, see what works good for you. And if it works good for you, keep it. Keep on doing it repeatedly. Because if it ain't broke, don't fix it. And risk to reward, this right here is probably like the most important thing besides like position sizing. Risk to reward. What is risk to reward? Well, in this trade right here on Google, we had a very, very tight stop loss, but we had a massive TP target. So our risk to reward in this trade right here, guys, this is a right here, you see right here, this is a 13-to-1 risk to reward ratio. What that means is you could take this trade 12 different, I don't know. So you could take this trade 12 times, lose 12 times in a row, and then hit this trade one time, right? And you will still be at break even on your profits. So again, with a 13-to-1 risk to reward ratio, you could take 12 trades, lose all 12, hit one trade, hold it the whole way, and you will still be at break even. Now, why is this so important? It's because if you can take 2 of these trades right here, 3 of these trades, and you lose like 6 trades, but you profit on 2 trades, if you have your proper risk to reward things set up and you have proper risk management, you're still going to be crazily profitable, even with like a 30% win rate. So if you're in school and then you get a 30 on a test, your ass is grass. Your ass is grass. You failed. Matter of fact, you failed horribly. But in trading, whenever you focus on your risk to reward, which is maintaining a favorable risk to reward ratio, you're going to always be in the green whenever you put everything together as far as your overall trading techniques and strategies. All right. Now, next up, I'm not going to take too much time either. You want to always analyze and understand which type of markets you are in, the overall trends, the overall news, and the overall volatility. What's happening today? What's happening right now? All this wars is happening in Israel. The bombs are happening. We're in mayhem right now. We're also in the election year. So there's just the volatility right now, guys, off the charts, right? So now I want to also cover something as well. Don't be shy to use these fair value gaps on bigger time frames to understand the overall market trend on the week, the month, the year, everything, on the day, everything, right? So this right here is going to go hand in hand with understanding what this market trends for the day and the week. So if you were to draw this gap with me here on last week, Friday, so I drew it right here. Basically, between like these two areas right here was a gap that was created on SPY. So I seen this, I drew it out, and the very next market day on Monday, we actually opened up right here, and we had a nice strong dip to the bottom of this gap. And can somebody tell me right here why this point right here is so significant? Somebody tell me in the chat. Why is this point right here so significant on the SPY chart? And keep in mind, this right here is the hourly chart here on SPY. This is the hourly chart. Okay, I see the DM. Yes, smart, yes. This right here is a fair value gap sweep. Yes, and someone said wick, exactly, same thing. So that wick below the gap, you want to go ahead and get your hands out, start clapping. Start clapping. It's giving you guys a great setup to go ahead and actually understand where the market's going to be pushing to. Because we never really know where the market's going to go, but having these strategies, having these things here in the chart, you have a much stronger bias and you have a stronger clarity of where the market's going to actually go to. So we have a gap right here on SPY on the hourly chart. We have a second one right here that was created here on the hourly chart. Can we just go ahead and see what happened? Let me go ahead and roll the clip. Check this out. So I go ahead and draw this gap here on SPY and this market right here, right? I'm gonna go ahead and press play. So we'll go ahead and press play, and we're going in the day right now. Cool. The market finally opens. Check it out. We see a dip right here to the bottom of this gap, and we see a bounce. Now, because I knew about this gap right here and then this dip, I knew that this week, at the very start of this week, we're going to need to have a little bit of downside at the very, very start of the week before we see an upside movement. So on Monday, and yeah, we have receipts. On Monday, I went ahead and called out some Netflix puts on watch, and we got in and we printed. So Netflix over here, it printed about 21% here on this puts on the same Monday, because we're able to understand that the S&P, that the SPY stock chart is a basket of the 500 most popular companies. So whenever a SPY drops, typically Netflix will also follow. So we took puts there, but now we're going to go ahead and press play and see what happened here in this market. Check it out. Look at this. Boom. 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 We had a crazy bullish day on Monday. The market blasted off. People were like, what's going on? Yes, the market blasted off. If you have your chart set up, you're able to understand that the market typically will move from gap to gap. And because we closed above this area right here, we moved directly into this next gap here on SPY that had a strong movement here on Monday. And I'm going to press play so you can go and see what happened. And then, like, obviously enough, after you make a crazy gap fill like this, you're going to need to see a little bit of some rejection. So we ended up dipping a little bit right there after hitting this gap right here. But don't worry. The market did pull back and made a comeback. But these gapping areas right here are going to help you understand the overall trend, the overall market sentiment of the market, So you can always be on the correct side of the market every single day and have more of a clear mindset whenever you're trading of like where the overall direction is going. So you aren't caught in some puts whenever the market's bullish or vice versa. Okay. So now cover that piece right there. Now next up, developing a disciplined trading approach. So we all know it's like we cover at least once a week. You want to always establish a trading plan for yourself. You never want to be naked in trading. What does it mean to be naked in trading? It means that you are out here trading with no damn game plan. All right. Let's not do that. Let's go ahead and leave that shit in March, right? But now it's April, but like, we'll go leave that shit in March. All right. Let's go ahead and imagine, right? You have 2,000 into your portfolio size. You're looking for a 7% growth every single day over 30 trading days. So Monday through Friday. Let's calculate. With this plan right here, in a full 30 days, you can go ahead and gross a profit of 6.8K on the month. And you can see everything day by day, your profits day by day. So you know exactly how much cash you're aiming for every single day. You know exactly how much cash you're risking on each trade every single day. Now, what can this do for you as the investor, knowing your plan? Well, after you hit your first, so if this is your first day on the job and you make 140 on a trade, you know that you just hit your profit goal for the day. If you want to keep this up and hit this overall goal right here. So having a trading system and plan into your trading, having a plan, knowing about the band's method, like with the sizing, knowing about proper trade strategies, fair value gaps in psychology, knowing about proper risk management. These right here are keys to make you profitable into your trading career. And then if you leave out even just one of these things, you can blow your whole portfolio. Everything, literally everything. So you have to keep all four pillars to your advantage. So one, trading plan. Two, trading strategy. Three, position sizing. Four, risk management. You need all four of them. If not, you should just go ahead and there's nothing wrong with like working a job. There's nothing wrong with it. But if you work a job right now and you don't want to do any of these four, obviously just work the job because you don't want to lose money that could be used for your future. You want to keep that shit. All right. So cool. You want to always track your trades and analyze your trades. It's going to be super important. And you want to lastly, guys, the most important piece, you want to continually educate yourself and go back and back test your trades. And this is going to bring me to a very important piece today in my key takeaways. Because today we cover like a lot of things, but guys, this right here is the most important thing that I'm going to cover with the whole entire class before we have today's class concluded and wrapped up. And this right here will 100%, 150,000% change the trajectory of your trading if and only if you take it serious. And we care about you guys so much right now. Like, we don't want to see you guys left behind, like just see you guys just like still slowly learning about concepts. No, we want to see you guys get to this bag, make your money, and go on vacation and chill. Live life, have your freedom, and just wake up and do what you want and where you want to be. So if you want to go ahead and do this, you want to go ahead and cultivate a disciplined trading approach. What does it mean to be disciplined? I've been trading for 4.5 years now, going on maybe almost 5 years now. Every single weekend, I'm doing trade journaling. I'm doing my homework. I'm doing back testing. So for everybody who's on today's call, I'm going to leave you guys with some homework. And I gave it to you guys last week, but I know a lot of y'all didn't do it. It's all good. Like, but today, I know exactly who's on this call today. And I'm gonna be, I'm gonna be on you a little bit because I want to see you win. So the homework that I have for you guys, I'm gonna show it to you guys right now. And I'm gonna give it to you guys here again in the chat so you can go ahead and have it for yourself. The homework for you guys today after this class, after coming to this class, you're going to go ahead and use this strategy with the fair value gap sweepages and then like the gaps period. And I want you to leave today's class and I want you to go ahead and mark up 3 different gaps that you have seen in the market after today's call, or possibly even just recap 3 different gaps that you've used this week. I want you to draw it out and I want you to actually analyze why you took certain trades and what happened. So this right here is an easy example of a gap. But the important piece is right here. This right here is a big time frame of the gap. This right here is a smaller time frame, right? So you can actually see that you're using different type of ways to analyze a trade from a high time frame to a lower time frame, right? The most important piece is right here. Check it out. I want you to actually take this picture right here and then I mean, look, if you don't want to win and become profitable, don't do it. Like by all means, just trade, make money, and just like enjoy the day. But if you want to be profitable and you want to almost guarantee this shit by the summer and you want to become a better person, this is just for you. This is for you today on the call. In this space right here, I want you to actually write down the 3 different trades that like you taken using your gaps on your chart. I want you to also include the picture of the trade setup. But like this is for you though. This is for you. And I want you to actually enjoy this process. This is right now, guys, right now, you're in the process. You're in the again, right now, if you're making 20K a month right now, it's no problem. Enjoy and love the process. It's going to come over time, but you have to enjoy and love the process. So in this blank right here, I want you to go ahead and include 3 things: the timestamp of the trade, which trade it was, and then which strategy you actually used. And then on the right of it, I want you to include how it went. And then I want you to do 3 different trades and then 3 different setups right here. And then after you're done with this homework right here, we're going to create a tab for you guys to actually include the homework into a certain section. And I'm going to actually see who's putting in work, who's actually applying themselves. And we're going to choose one person at the end of every single week. And you're going to get a surprise gift because you're actually putting in the homework, you're putting in the time. You're showing the admin, you're showing me, Mario, and Jigga that you actually are taking trading serious and you want to become a full-time trader in the future. Even if it's not full time, even if it's just, all right, cool, I'll make 5K a month, 3K a month. I just want to pay off my car note and my rent and my bills of trading. That's cool. That's cool. My mentee today is a girl. She made her first 1K day today. And she's been active, like asking questions, turning in homework, but not just asking me random questions, but really, really asking me punctual, like having questions written down, like specific questions, asking them and applying it to her chart and herself. And I realized that the homework, turning it in and getting graded on your homework, this is going to change everything for your trading. So I see everybody who's on today's call today, you know what I'm saying? And, I'm looking forward to talking to you guys here in the future, to see you guys actually win in the future. But right now, this homework right here is your assignment. This is your assignment. And I'm going to also forward you guys a video that's going to help you guys as well with your charting and everything like that. So if you want the video as well, I want you to go ahead and send a message into the VIP chat in here and then just be like me, just like put me in the chat. I want to see who's actually ready to go to the next level, because not everybody wants to go to everybody wants to go to the next level, but not everybody wants to work and get there and actually put in the steps needed to get to the next level. I'm already doing pretty good in trading. I would say making 20 to 30K a month consistently is pretty good. It's not crazy, but I will say, I can do what I want to do. And I'm about to go to Belize at the end of on next Monday, and I'm going to be trading on the beach. And I'm going to live stream the trades. And I'm going to show you guys that the same thing that we preach today, we're going to use the same things while we're on vacation. So I'm going to aim to pay for my vacation 4 times over during my vacation. And I'm not saying that shit to brag. I'm just saying that shit because it's very possible after you lock in with yourself, you could be anywhere in the world, have a computer, have your phone, have Wi-Fi, have a drink if you want to, shit. And you could literally hit your goal, but you have to get very, very intentional. So with that being said, man, I'm gonna go ahead and forward message in chat like who is ready? Who's ready to get to this bag? Shit. Bag and get the homework for the week. Drop a me. And with that being said, if you put a me in the chat, if you're on today's call, I don't care what y'all say, I'm gonna be texting you guys, I'm gonna be holding you guys accountable because we're gonna be starting up a boot camp very soon between me, Mario, and Jigga, like a collab program where we're really, really just dive deep into you guys, help you guys really just personally become better traders, better people. And like the best thing about this is right now, we're so close to the summer right now. If you guys lock in right now, put in the work, apply the time for yourself, you will be light years ahead of everybody. And by the time that like June hits, you have so much more progression. The whole entire summer, bro, you can make a 20K and you can make a 20K in the summer easily just from trading. And then that's gonna compound into the winter, into the next year. So the time is now. Time starts now, man. I'm not gonna sit here and preach and motivate you guys. If y'all want to get to this bag, I'm gonna help you guys out here personally. The homework is gonna be here in the chat. I'm gonna go ahead and put a little comment right here so you can go ahead and tap into it. If you're watching, if currently you're watching this video like a replay right now, I would say hop in the VIP chat, go to right here. I'm gonna go ahead and pin this message right here for the homework. It's not pinned. So now, that being said, guys, do you have any questions? Anything before this class is concluded? Any questions? Let me pause this recording as well.